Greetings, stock enthusiasts. Another trading week has begun, and we are excited to delve into the latest financial and stock market news. We will provide a comprehensive overview of the most significant events shaping the markets this week, as well as an in-depth analysis of the previous week's developments. Additionally, we will be examining 3 of the hottest stocks making headlines so you can stay ahead of the curve. It is crucial to acknowledge that the information shared in this podcast is for educational and informational purposes only and should not be treated as financial advice. We encourage you to conduct your own research and seek guidance from a financial advisor before making any investment decisions. We deeply value your feedback and support, so please don't hesitate to hit that subscribe button. Leave a comment with your thoughts on this week's report and give us a like if you found the information helpful. With that, let's dive into the exciting world of stock market news and analysis. On Friday, U.S. stocks closed sharply lower, with all 3 major indexes suffering weekly losses, following the release of a report from the Bureau of Economic Analysis that showed the Personal Consumption Expenditures Price Index, the Fed's preferred measure of inflation, rose more than expected. The index showed that the cost of U.S. goods and services jumped 0.6% in January, the biggest rise since last summer. The year-over-year rate also increased to 5.4%, from 5.3% in December, in the first uptick in 7 months. The more closely followed core index, which excludes food and energy prices and is viewed as a better gauge of underlying inflation trends, also rose 0.6% in January, climbing 4.7% over the past 12 months. Economists had forecast that core PCE prices would rise 0.5% in January and 4.4% year over year. The disappointing inflation data sparked concerns that inflation is sticky and persistent, said Philip Orlando, chief equity market strategist at Federated Hermes. It is not coming down nearly as quickly as the immaculate disinflation crowd expected. That has investors nervous that the Fed may have to get even more aggressive than the Wall Street thought just a month or 2 ago, said Orlando. As a result, the Dow Jones Industrial Average fell 336.99 points, or 1%, to close at 32,816 after declining 510 points at its session low. The S&P 500 fell 42.28 points, or 1.1%, to finish at 3,970, and the Nasdaq sank 195 points, or 1.7%, to end at 11,394. For the week, the Dow fell 3% while the S&P 500 slid 2.7% and the technology-heavy Nasdaq Composite dropped 3.3%. The Dow has fallen for 4 straight weeks, booking its biggest weekly percentage decline since September 2022 and longest weekly losing streak since May 2022. According to Dow Jones market data, the S&P 500 saw a 3rd consecutive week of decline. Despite concerns over inflation, there were also some positive economic data releases on Friday. Consumer spending rose 1.8% in January, the biggest increase in almost 2 years, while an index of consumer sentiment rose in early February to a 13-month high of 67. However, the strong job market may make it hard for the U.S. Central Bank to bring down inflation, according to Fed Governor Philip Jefferson. The ongoing imbalance between the supply and demand for labor, combined with a large share of labor costs in the services sector, suggests that high inflation may come down only slowly, Jefferson said in a speech at a University of Chicago Booth School of Business conference in New York. Looking ahead, many investors are worried that rising inflation could lead the Federal Reserve to raise interest rates more aggressively than expected, which could weigh on stocks. "We think we're going to grind lower over the next couple of months," said Orlando. "We could very easily retest the mid-October lows we saw last year." And now let's dive into the latest news and updates about the commodities markets. Oil prices have seen a bit of a rebound, with futures rising as investors closely monitor Russia's production cuts and exports, while also keeping an eye on Chinese demand. The U.S. benchmark is currently trading around 17% below levels seen prior to Russia's invasion of Ukraine a year ago. West Texas Intermediate crude for April delivery rose 93 cents, or 1.2% to finish at $76.32 a barrel on the New York Mercantile Exchange, after breaking a 7-day losing streak in the Thursday session. The global benchmark, Brent crude, also saw a 0.2% weekly gain. The recent drop in oil prices can be attributed to an influx of Russian supply, but the country is now planning to cut production by 500,000 barrels a day in March in response to further price caps and sanctions in light of their invasion of Ukraine. It remains to be seen how these production cuts will play out in the coming weeks. In other market news, gold prices have seen a significant drop this week, with markets falling as investors attempt to get down to the 50-week EMA. As gold is highly sensitive to the US dollar, its recent downturn may be due to the US dollar taking off again. While there is significant support just below the $1,800 level, breaking down below that level could open up the possibility of a move down to the $1,750 level. Investors should keep an eye on the US dollar to gauge where gold prices may be headed in the longer term. As we move forward into the coming week, it's time to turn our attention to the most significant events on the horizon. Investors are preparing themselves for a week filled with important events, including results from retail bellwether Target, data from the manufacturing and housing sectors, and a measure of consumer confidence. With inflation data from last week that exceeded expectations and growing pessimism over the Federal Reserve's rate hikes, the stock market rally is under pressure. The Dow suffered a fourth straight losing week, while the S&P 500 and NASDAQ had their worst week of the year, losing 2.7% and 3.3% respectively. With that said, investors will keep a close eye on the retail sector, particularly the results from Target, after Walmart's warning on the state of U.S. consumers last week. Additionally, a jam-packed calendar of reports from the housing and manufacturing sectors, which are the two areas of the economy most impacted by policy tightening, is also scheduled for release, along with a key measure of consumer confidence. On Monday, the economic calendar includes durable goods orders, January preliminary, Dallas Fed manufacturing activity, and pending home sales, among other data. Tuesday's calendar includes Conference Board, consumer confidence, retail, and wholesale inventories. Wednesday will have construction spending, month-over-month, and ISM manufacturing, and Thursday includes initial jobless claims. Finally, Friday will have S&P Global U.S. Services PMI. The earnings calendar is also filled with big names, with results expected from Workday, Zoom Video, Dollar Tree, Salesforce, and Kroger, among others. Investors are likely to be closely monitoring these earnings reports as they could have a significant impact on the markets. In conclusion, with a week filled with important economic data and earnings reports, it will be interesting to see how the stock market reacts to the events. It will be worth keeping a close eye on Target's results and the data from the housing and manufacturing sectors, which will provide a snapshot of the current state of the economy. Additionally, the earnings calendar is packed with big names, which could provide further insight into the performance of the markets. Let's shift our focus from upcoming events and take a closer look at the three hottest stocks currently on everyone's minds and frequently searched for on StockInvest.us. For an in-depth analysis of these stocks, simply enter the ticker name in the search bar on StockInvest.us. On Friday, February 24, 2023, NVDA stock price fell by 1.6%, with sales and earnings also dropping due to subsiding consumer demand for electronics. However, NVIDIA's management has done an excellent job of shifting the focus away from its crashing gaming segment and towards its long-run prospects in the artificial intelligence industry. Similarly, on the same day, Amazon stock price fell by 2.42% as the effects of inflation continue to impact many companies, including Amazon, which reported over $10 billion in operating losses in its online retail segments last year. Despite this, Amazon remains dominant in multiple high-growth industries, which has led to differing opinions among investors on whether now is the right time to invest in the company. Lastly, on Friday, Tesla's stock price fell by 2.57% to $196.88. The company is hosting an investor event on March 1st, which is expected to cover Tesla's growing power business, increasing cash flow, and potentially the announcement of a new, lower-priced vehicle to ensure growth through the end of the decade and defend against competitors in the EV market. Analysts believe that Tesla's current stock price, which had risen about 64% year-to-date before the drop, may need a new factor to help it continue to rise. Third-generation $30,000 vehicle being touted as a potential catalyst for growth. And to wrap things up, let's dive into our final topic. In his annual letter to shareholders, the legendary investor behind Berkshire Hathaway, Warren Buffett, expressed his unwavering optimism in the U.S. economy as well as his company's future. Despite facing challenges such as higher inflation and other market factors that have affected stock prices, Berkshire Hathaway has remained steady. Buffett urged investors to focus on the big picture and remain patient, rather than being consumed by self-doubt and self-criticism. Buffett emphasized his faith in the American tailwind, citing its dynamism and its ability to benefit Berkshire Hathaway over the last 58 years. He also defended buybacks, which have come under scrutiny from politicians in Washington, and signaled confidence in his company's stock by repurchasing $7.9 billion of its own shares. Berkshire Hathaway posted a record $30.8 billion operating profit in 2022, despite facing challenges such as elevated inflation, rising interest rates, and supply chain disruptions. However, the company also posted a $22.8 billion net loss compared to an $89.8 billion gain in the previous year due to the decline in the prices of stocks in its investment portfolio. Buffett downplayed the net results, stating that they are volatile and are affected by accounting rules. Despite being one of the most famous American investors, Buffett remained humble and self-critical of his own investment prowess, emphasizing that most of his capital allocation decisions have been so-so. He attributed Berkshire Hathaway's satisfactory results to only a dozen truly good decisions. Buffett stressed the importance of trust and rules in running large businesses and urged investors not to focus on short-term market conditions. While indirectly criticizing President Joe Biden's proposal to quadruple the 1% tax on corporate stock buybacks, Buffett reminded investors of the amount of federal income taxes Berkshire Hathaway has paid over the years and expressed his hope to pay even more in the next decade. Buffett also renewed his affection for his friend and business partner, Charlie Munger, and announced that they will attend Berkshire Hathaway's annual shareholder weekend in May. Despite facing challenges and criticisms, Warren Buffett and Berkshire Hathaway remain a force to be reckoned with in the world of finance. Thanks for tuning into StockInvest.us. We hope you found this video helpful in your quest for informed investment decisions. Remember to keep an eye on a stock's fundamentals, financial health, industry trends, and any relevant information or events that may impact the stock price. If you have any questions or comments, feel free to reach out to us via comments or our social media channels. We'll be back next week with more analysis and insights, so stay tuned. As always, please keep in mind that trading involves a high risk of losing money and that you should speak with a financial advisor before making any investment decisions. The information provided on StockInvest.us should not be the sole basis for your investment decisions, and any use of the information provided is at your own risk.